What's up, guys? Welcome back to the channel. Hope you guys have had a great start to the week. In today's video, I'll be going over the 8 and the 5 exponential moving average trading system that I think can be very helpful for a lot of beginner traders who don't maybe have a good system in place for either entering or exiting the positions, or they're looking to incorporate something new into their system. So this video is going to be an introduction to this system and how you can apply it effectively for both swing trading applications and potentially even day trading applications. And before we get into it, make sure to drop a thumbs up. Let me know any feedback in the comment section, and also drop a subscribe button as well if you guys found this video helpful. Anyways, guys, let's get back into the video. So this 8 and 5 EMA trading system is essentially a way of leveraging the exponential moving averages and actually two of them to create basically a trend following system for your swing trades. Now, I primarily like using this 8 and 5 EMA system actually on the daily and the 4-hour time frame. For me, this is the best time frame that this system works on. And essentially what we're using the crossovers of the EMAs to act as a buy and sell signal. Now, I know that moving averages are sometimes the very first indicator that a lot of new traders get used to, and it's the very first indicator that a lot of traders try to incorporate into their charts. But this is a way of not actually using the moving averages as a form of dynamic support and resistance, which is what they're inherently designed to be as. But this system is actually using the crossovers of the moving averages to act as your buy and sell criteria. So it's important to realize that, and also realize that no trading system is perfect, but there's certain criteria and certain scenarios that this trading system is going to work best in. And for me, the best ways that you can apply this trading system is for swing trading applications on the 4-hour and the daily time frame. So right now I have this stock on the daily time frame, and just before I get into like why I like to use this trading system and how it can be applied, the reason that this does work very effectively when compared to any other form of moving average crossover systems. I know there's a lot out online that people like to follow. Everybody has their own specific set of numbers they like to use. But the reason I'm using the EMAs for this one primarily is because EMAs react very quick to price. And it can be very good for those entry and exits because, it reacts very quick to price. And then the second thing is that the 8 and the 5 EMA specifically are chosen for the system because 8 and 5 are actually Fibonacci numbers. Now, Fibonacci numbers are essentially a special set of numbers that in the stock market, at least, a lot of algos and a lot of traders use for developing their price action or creating buy and sell orders in a lot of cases, especially a lot of high frequency trading applications. A lot of these algorithms, they will calculate whether or not they should enter or exit a position or how they should scale out of a position using some of these Fibonacci moving averages. And in this case, I'm using the EMAs because it tends to work the best for this trading system. So this is essentially how my system would look like. I use the candlesticks, and then I use the two EMAs on the chart and have them overlapping in this case. So the 5 EMA, as you can see, is the yellow EMA in this case, right? So it's the EMA above the blue EMA, which is the 8 EMA. Now, the main way you're supposed to use this system is by the buy and the sell signals using the crossovers. So whenever the blue EMA crosses below the yellow EMA, or in this case, the 5 EMA crosses above the 8 EMA, that's typically considered a buy signal for a swing trade. And then whenever the exact opposite happens, like right here, when, it's kind of hard to see, but when the 5 EMA crosses below the 8 EMA, that's when you can get a nice sell signal. Now, obviously, this is not something that you should solely be basing your decision off of. So that in this video, I'll be kind of showing you guys, or I'll be explaining to you guys how you can incorporate support and resistance into this as well. So essentially, whenever we're looking to buy a stock, for example, if we're looking at this right here, the chart is in a nice downtrend, right? This was the March sell-off, and you can see that the 5 EMA, the yellow line, is trading below the 8 EMA. So this is the definition of a downtrend for this trading system. So in this case, you'll be looking for selling opportunities, right? But now, for example, if you're looking for a buying opportunity in this specific case, according to this system, what you will be doing is you will be waiting for the yellow line, the 5 EMA, to cross above the 8 EMA, right? So let's just go through like a live example right here. So we're waiting for a couple of candles. This is the daily chart. So we're waiting, and then we have this candle right here. And as you can see, after this candle closed, the 5 EMA is now trading above the 8 EMA. So for me, this is the buy signal for this specific trade. Now, this is a swing trade. So swing trades can last typically from multiple weeks to multiple months. Keep that in the back of your mind, right? Swing trades are lasting, a long period of time, in the medium term at least. And that's how you're supposed to apply the system as well. So whenever you see a crossover like this, the entry criteria for me is you would enter when the price breaks the high of this candle. So this candle closed pretty bullishly, but unless and until in the next trading day it can break above that, right? I'm not buying this because it could be a false signal, right? We want to wait for a confirmation in every trade. And the confirmation in this case would be the break of this candle right here, right? So the first criteria is that we have a candle that closes and causes the EMAs to cross. And then the second criteria for us is we're going to wait for the next candle after this, or whatever candle that may be, maybe the third, the fourth, even the 15th candle. We're going to wait for that candle to close or move above the high of this candle right here. So we're going to wait. And then guess what? The next candle actually gapped above this candle, right? In the high of the candle. And in this case, it actually closed above it as well. So that's quite bullish. So that would kind of be my entry trigger for this specific swing trade using the 8 EMA system. And then my stop loss would be right below the low of this candle right here, or maybe like at a support area. So in this case, if you can see this, right, this general area right here acts as kind of a support area, right? So I'll just highlight this in purple. So what I would do is I would put my stop loss maybe a couple of percentage points underneath the support area, right? And then my price targets in this case would be the next resistance point. So my main resistance point right here, I can see clearly is the 63 area, right? So that's my price target. So in this case, we set the stop loss, we have a price target, we enter at the break of the high, and now you can see we just hold the position. This is it. We're just holding the position and we're being patient and letting the system play its duty. In this case, we hold. And for me, the sell criteria on this kind of EMA system is to wait until the 5 EMA crosses below the 8 EMA, right? Or until you see some sort of complete reversal pattern in the candlestick. So if you see like a hammer, if you see like a doji, if you see like a bearish engulfing, that's when you should be selling. That should be your sell criteria, right? And if that happens at a resistance area, that's even better, because you always want to sell at resistance and buy at support, which is the golden rule of trading. So in this case, we're holding this until these EMAs cross over. So you can see that, the market's very bullish, and then it starts to kind of consolidate a little bit, right? So the consolidation happens, it continues higher, and now it gaps up above this resistance point. So for me, this is my, my indication to keep holding this position. I'm going to keep holding it, and then we see this nice red candle. Right now it's consolidating. And this is where the advantage of the 8 and the 5 EMA system really kicks in. This kind of system, when you're applying this criteria, it can help you kind of not panic sell on the pullbacks, right? Typically what happens is if you're entering a simple position, you're up quite a bit on the position. What happens is if you see like a couple of red days, this happened to me too in the past, by the way, but if you see a couple of red days, you might either panic sell or just lock profit. And then in a lot of cases, unfortunately, the swing trade actually goes even higher, and then you get some sort of FOMO, and then you feel like you're selling too early. So this system is going to help you counter that exact flaw where you sell too early, right? So your criteria in this case is to hold the position until the EMAs cross over. And the best part is, since these are EMAs and since these are Fibonacci numbers, a lot of algos don't let the price fall below that specific threshold where the EMAs are going to cross over. Right. So in this case, it works out pretty well, right? And it's going to work out. In my experience, this system works out well 65 to 70% of the time. And that's plenty for, any sort of swing trader. So in this case, getting back to the chart, we're looking at this kind of formation, right? We're still holding the position because the EMAs haven't crossed over. We're still holding another couple of red candles, right? And then we're still holding the position, right? We're still not selling. We're still holding the position at this level because the EMAs haven't crossed over, right? And this gives us a signal that, this is probably just like a regular pullback and nothing to be really concerned about. So again, we're just still holding the position, right? And guess what? The market found support and then it bounced off even higher, right? It bounced off even higher. So if you use this system, you're still holding this position. There's a very low chance that you panic sold or locked profit here, right? And then we keep following this, right? The market goes even higher. And then we finally see our crossover right here. So the EMAs actually cross over at this candle. And this is, based off the system, this is your sell criteria. And, if you just, use the system blindly in this case, you can see it would have performed fantastically for you, right? You would have gotten a fantastic sell. Obviously, you're not going to nail the top. Nobody can nail the top in a trading system. Nobody can, right? Nobody can even nail the bottom. But this EMA trading system is essentially going to help you maximize the return on your trades and help you make sure that, you're maximizing those returns so that, you're able to grow your account, very fast. And that's the main key thing behind a successful trader, is it being able to maximize your winners, right? And not sell too early. And then you can see, even if you wanted to go on the short side, if you did ever take this as a short, entry, it also works on the short side very well. So in this case, if you held this, right, you can see that even on these kinds of retracements, the EMAs still are tied together. The EMAs don't cross over as frequently as a lot of other moving averages, which is the benefit of the system. So it can give you a lot more quality setups when compared to other EMA or MA crossover systems, which is very, very good. And again, you can see, if we took the short position, right, there's a little bit of consolidation. You could have maybe held this from here to here. And then if you went back long, right, crossed over again. But the EMAs, the benefit is the EMAs aren't like too frequent in terms of their range. So they're holding pretty well. So again, this is nice. If you took this entry right here on this bullish crossover, you could have entered at right here and even actually sold up here all the way at 85, right? If you wanted to sell there. Or if you just took the crossover, you could have maybe sold right here. So you could have taken like a nice $1 to $2 profit on the swing. And then we see the market now comes back up, right? We have another crossover and the market keeps going back up, right? And then essentially you're holding the position until the EMAs cross over. And it's very rare that the EMAs cross over until there's a very, very significant move. So that's essentially the basics of how I like to apply this trading system. I definitely suggest you guys try this out on different charts and different setups, and definitely, kind of find which kind of sectors and which kind of stocks work best with this kind of play and this kind of trading system. In my experience, this has worked perfectly for a lot of swing trades for me, even on a daily and even on the weekly time frame sometimes. And personally, this system just really helps me kind of maximize the returns on my trades. And this right here is also a very great example of that. You can see when this specific stock ran up on this entry point, for example, if you were just buying off the crossover, right, you would have entered here and you would have held this position all the way up here, and you wouldn't actually have even sold on this pullback. So a lot of traders would have actually panic sold on this pullback. Instead, the EMAs actually don't cross over. If you look at it right here, right, the EMAs held above each other and you're still holding the position if you follow the system. And you can see, right, you'd have maximized a pretty nice chunk of this run up here as well if you traded off this system, which is a fantastic benefit of this trading system. And in this case, you can see that we're at a resistance point right here. So, this would have been your sell area and you could have logged profit on there. And also another way you can also apply the system is by using the distance between the EMAs. So typically if the EMAs are very far apart like they are right here, the farther apart they are, the higher chance of them pulling back, right? Or the higher chance of the price pulling back. So whenever they're very far apart, you actually want to look for near resistance points or near-term resistance points and sell on those near-term resistance points. You don't want to hold too long because that can be kind of deceiving to your trading system. You want to really enter at the right crossover and then sell at a resistance point and not necessarily just wait for the crossover. That could be another strategy that you apply. So, there's multiple ways that you can apply this flexible strategy. But this is kind of the way how I like to apply it. And I think that if you have this on your chart for swing trades, it's going to really, really help you out and maximize those returns, because you are using the Fibonacci numbers in this case, and the EMAs tend to hold above themselves pretty well, even through a lot of major pullbacks, which can really help you maximize those gains. So anyways, guys, that's all I have for this specific trading system. Let me know any questions about this. I'm very happy to answer any questions. I know this is going to be a little bit confusing at first, but feel free to DM me on Discord or even send me a message on Twitter. Links are down below in the description. Make sure to also download Webull if you haven't already. If you're on Robinhood, I highly suggest switching to Webull. This is a platform I have on here, and it can really help you maximize your returns through all these, fantastic tools that it has. And especially one of the best features I like about Webull is the fact that sometimes EMAs can be a little bit hard to read. And in some cases, it can be a little bit tricky to decipher whether the EMAs have actually crossed over. And the best part about Webull is if you look at the top left right here, you can see that it actually gives you the live number that the EMA is representing at any given point in time or any candle. So you can actually, precisely tell whether the EMAs have crossed over using this little data sheet at the top. So overall, Webull is a fantastic platform. Link isn't down in the description. You can also get 4 free stocks if you deposit a certain amount of money with them. So make sure to do that if you're on Robinhood or any other platform. And also make sure to subscribe, drop a thumbs up, follow me on Twitter as well. I'll be posting more charts and more content on there as well. And yeah, overall, I hope you guys have had a great week, and I hope you guys have a great rest of the week and a great rest of the month. Take care. Bye.